Right folks, it's Friday the 1st of February. I wanted to do a midweek video, but there wasn't an awful lot to say with the FOMC. The market just waited for that. Then we had the big reaction, so that's always just a gamble having a position over that announcement. Not something I like to do. Yesterday was a better day, much better day actually. We actually had some decent levels to trade, and we got a little bit of movement carrying on from the FOMC meeting. Right, this quick video is to show you the Emini S&P testing the 100-day moving average. Now look how well that 100-day moving average held middle of October, beginning of November, and beginning of December. So we need to pay attention to that. 27.11. We've been up to 27.13 if I remember correctly. So it's definitely having an effect. The question is, are we in a bear market, and does the market reverse from here and collapse? It could do. Clearly it's going to be non-farm payroll number dependent. We get a very strong number out of the non-farm, then maybe we will rocket up to around the 27.40 area. But I need to make you aware of that. If you think the market's topped out in overbought conditions, and if you quite fancy a return to bear market conditions, then now is your chance. The weekly chart shows how we rocketed off 26.22 this week. You'll remember that level down there. I'm pretty sure I had it as a buy for obvious reasons. We had the neckline to the head and shoulders, which we've now broken above, of course, and the 100-week moving average. That was a nice little level this week, and that is where we could return to if we do not break the 100-day moving average. So there could be, 80 points, 90 points or so to the downside on that trade. Now the reason this gets interesting is because the Nasdaq is also hitting the blue 100-day moving average at 69.20, and that has held. We just peaked above it at 69.43, but on the chart you can see that's only a minor blip, and yesterday we closed the last trade with 69.15, so we did close below the 100-day moving average. So do we hold below there? Does a non-farm payroll number send us lower? We're not quite overbought, but you can see there is possibly there is definitely some divergence there, which would be a negative if you like that kind of thing. Again, 100-day moving average did hold the peak in October, and we held below it and then plunged. So I think it is significant enough. If we get up through 69.55, say, well, maybe we can get up to 70.50. And interestingly, the Dow Jones did not go higher yesterday, did not follow the S&P higher, and it is being held by the red 200 and the blue 100-day moving averages around 25,000. So quite interesting scenario for stock markets. We could, put it this way, it's a make or break, isn't it, for bulls? If we break up and let's say if we push above 25,100, that's going to be very positive. It's going to show that we've broken those levels and we can go significantly higher, and obviously not breaking that means we go down. So all three US stock markets at important resistance levels. You can decide whether you want to roll the dice on those trades before the non-farm payroll comes out. It's obviously a gamble. Everything will be dependent on the release of that number. DAX has not managed to follow the US markets high this week, not at all. And we are hovering just below the 100-day moving average there at around 11,370, 380. So let's see if that gets tested today at least. There's a lot going on in the DAX. There's this important necklines to the head and shoulders in there at just above 11,400, not a million miles away. And then we've got the 200-day moving average at 11,477. So the DAX really doesn't look too good at all, does it?